The debt clock has had a slight pullback for the dollar to silver ratio, but it won't be enough because of this number right here. Let's explore. In my ongoing series about the debt clock and silver, we're going to be looking at the debt and some of these numbers here and how it relates to the precious metal. I always have to preface this by saying that this is not the price of silver. It's not what the price of silver should be or would be or even could be. This is a ratio. This is the dollar to silver ratio per ounce. Now, we have moved and shifted focus here because this is the number we looked at, the dollar to silver ratio right now. And what does that mean? That means the year-over-year increase in the U.S. M2 money supply divided by the yearly world production of silver in ounces. Both these numbers sourced by the Federal Reserve and by the USGS. Now, for several months now, and even longer, this has been at zero. And I've talked about that in prior videos. And why is this? Well, it's because they are not printing any new money. Now, as you see here, this is the dollar supply. And they try to explain this. Actually, the debt clock people have done a pretty good job at this. The money supply is shrinking. And that is what is precipitating this move here from the $0 per ounce now, which is why it is now attached to a 5-year ratio. And that number is going down, is pulling back a little bit now, because in my previous video, it was at 1562, and that was several months ago. So we've had a slight decrease. But the thing is I don't think it's going to be enough. So when we take a look at this, again, so that people understand that this is a ratio, the dollar to silver ratio, I think it's valuable to understand this information. And I think in some ways, it's even more crucial than price right now. So that means that there are $1,556 that have been printed over the past 5 years per every ounce of silver that has been mined over the past 5 years. This is the 5-year average of the yearly increase in the U.S. M2 money supply in dollars, divided by the yearly world production of silver in ounces. So that should help you understand where this is coming from. This series, which is one of my most popular playlists on YouTube that I've done, is crucially important because it helps us to take a step out of just looking at silver's value in terms of price. That's so important, folks, because we do get hung up on price, myself included. I do many videos about the market updates and the movement of price and try to help folks understand and help myself understand what moves the markets on a day-to-day, week-to-week, month-to-month, and year-to-year basis. In terms of the price of silver, it is important. But when you take a look at the grand length of time, and we're going to look at this here in a moment, this gives you a better idea about not only the amount of dollars that are out there in the world economy, not just the U.S. economy, but also about the other factors that are, in a sense, in some ways, rather suppressive to the price of silver, and that is the paper to silver ratio. And I don't talk about this a whole lot, but nonetheless, this is a suppressive force. There are 193.63 paper versions of silver out there, the number of paper silver ounces, and they're electronic in reality, traded on the major world silver exchanges divided by the actual world production of silver in ounces. So that is way out of whack in my view. I never have understood why they did that, but it gives them more power to essentially influence and to make money off of commodities in general, but silver in particular in this case. But we can see it's also affected to the paper to gold ratio as well. And I think that is something amazing to see. Now, when you look at it compared to these two numbers are actually fairly close in how that's brought out. And we take a look at the dollar to gold ratio, we can see there that number is very high as well too. Now look at over the 5-year period and look at over the 10-year period, and they're coming closer together and for both these numbers. Now let's take a look at the M2 money supply, because this is really the heart of the matter here. And I don't think it's going to be enough to really bring and rein in spending, because of this graph right here we're looking at. As you can see, this is from the Federal Reserve itself. The St. Louis Fed hosts these numbers and these data from the M2 money supply, which is the most popular and complete measure of most of the money that is in the economy today. Taking a look at this, we can see what an alarming increase that we have seen since 2020. We're coming up on 4 years since that little mini recession, and that is what the little gray line means. We had a slight recession, but all this liquidity into the market has brought us out of the recession, but created a bigger problem, a problem from which we have not seen the full effects of yet. And it may be a little while before we do. However, as I record this video, gold has now reached an all-time high in nominal dollars, and silver is now more than halfway to its all-time high. Still got a long ways to go for silver, but nonetheless, this M2 money supply is increasing at an alarming rate over the past 4 years. But in reality, since then, it has come back down from its all-time high here in May of 2022. We can see that it has come down dramatically. If we look at this section of the chart, it looks pretty good. But where's our baseline here? Billions of dollars, $20,700 billion. It's hard to fathom how much of this is around into the economy and these units of billions of dollars here as that baseline, and where we've seen it come down and then go up again, and now it's coming back down. So somewhere here back in April of this month, they decided to turn the spigot back on to a degree. And that's only a drop in the bucket. And again, as we see it kind of bounce around here, and we go back, we can see here in the grand scheme of things, that is really nothing, hardly anything. There's so much of these dollars floating around the entire global economy to the tune of 58% as of the last measure that I've been able to find on this. The dollar is the dominant currency, and at this point, honestly, it's one of those things that in its current state, it is too big to fail. It is in everybody's best interest for the dollar to continue. But then nonetheless, there's going to come a point in time, as we have seen by many of the BRICS nations that want to declare independence from the dollar, or at least slowly wean themselves off of it, and they are. And this is why many central banks around the world are indeed moving towards accumulating more gold in their vaults. Now, here is another example. This is really nothing new, although the recent events that we've seen since the last year or two have really accelerated that, in part because of what we're seeing here with the increase in money supply, but also the wars and weaponization of the dollar. But we're going to take a look here, and we're going to take a look at 10-year periods. And I want to show you something here, I think, that will give you a better example as to why this may not be enough to really do much good. Over the past 10 years, from 2010 to 2020, it's been a steadily increasing upwards movement of the dollar, of the printing of dollars. We move it over here to right here, we can see there's that big increase there once the pandemic hit. They printed a lot of dollars because the economy was essentially shut down. Everything was shuttered. We're going to go back through here and take a look at other 10-year periods here, and we can see, look at over here. This is where quantitative easing began, and that really doesn't seem like that much of a big upward movement in currency creation compared to 2020. Massive. What we're seeing, what happened in 2020 is a big part of the reason why we have a inflation right now at this point in time. So we look back here and we go through another decade here. We're going to go back and from 1990 to 2000. Much the same, although the mid-90s we saw that it was relatively stable, and then in around April of 1995, it really increased the M2 money supply during that period of time. So that was pivotal, and the rate of increase in the money supply was dramatic then. We go back from 1980 to 1990, again, fairly stable upwards momentum, but we saw the increased printing of money in the early 80s after this big recessionary period here. And why was this? More government spending. And yes, we had a very conservative president at the time, but he made a deal with Congress, and this little movement here will stay with us for the rest of the dollar's history, because we never have been able to pull back to that period for sure. Even adjusted for population growth, it continues to grow at an alarming rate. Let's go back another 10 years. Again, you notice a theme here. It just keeps going up and up and up. And then back to 1959 to now, you can see another theme. The same rate pretty much. So if you look over the course of that time, if we were to take and adjust this again to 20-year increments, this will give us a better example, I think, of another idea of just how fast this is growing. And this exponentially gets worse as we shift through these decades. This is a generation at a time. A generation at a time, you can see the movements, you can see the increases, and the accelerated increase of the M2 money supply for each generation, as we see here. And boom, and there we are. This, folks, has led to where we are at right now, with a debt that is accelerating out of control because of this deficit spending. The deficit spending, and then there's four area big budget items of the massive spending: Medicare, Social Security, defense, and interest on the debt. And really, some say that is in the tune of $1 trillion now, but it keeps rising as well. These numbers will continue to tick up, but one thing that will not tick up, and that is the production of silver, at least at any appreciable amount. Most of the silver is mined as byproduct of other metals, but they are saying, and they are forecasting, that the silver supply may decrease from the mining sector over the next couple of years. Not by a whole lot, but decrease. And if you have a increased demand, that is going to mean that sooner or later the prices for silver are going to climb, and we very well may start seeing numbers into the high 20s into next year, because there's going to be a whole lot more pressure for the price to go up than what has been keeping it down, the derivatives market and other factors that some people feel are really suppressing that price. But nonetheless, that is where we are at now. This $1,556 that have been printed per ounce on average over the past 5 years may not be enough of this pullback from where it was just a few months ago at 1562. So there we go. Very interesting, but it just goes to show you that you cannot print silver, and silver is the closest monetary metal to man that has proven itself over centuries here in the United States and in the world. Let me know what your thoughts are in the comments section down below. Hope you found this video informative, insightful, and educational. Would like to extend a multitude of gratitude to each and every one of you for taking the time to watch, and to encourage you to please rate, share, comment, and subscribe.